So this is a chart of CERE, and in this video, basically the main point is going to be the importance of position sizing and predetermining your risk to size your position correctly, and doing all that before you end up entering into a position. Because basically what happened here is I ended up, CERE is a stock that broke out yesterday, went from 2 to 4 in one day. I was eyeing it this morning for a short or a long. I wasn't really biased either way. I was just going to let the price action talk to me and tell me, what it was going to do. And it ended up telling me that it was bullish. And so I went ahead and I entered on an intraday break. But the problem with this whole thing is that I'm normally really good at predetermining my risk dollar amount, and I know what I'm risking before I enter, and I'm accepting of that risk. But in this scenario, I kind of just threw an order in, and it wasn't until I entered on this candle and saw it literally slam down right after I entered. Around 421 is my entry. It slammed down all the way to 4, and then I realized, looking at my matrix, whoa, I have a lot of risk on the table here, way more than I normally do. So it started to affect me emotionally. Excuse me. And what happened was I pretty much ended up getting out right away, or as soon as I could. I sat through a little bit of it, and then I saw an opportunity to exit for you know for not taking a big loss, and I went ahead and took it. But I was thinking of it all wrong. First of all, I should have accepted the risk before I entered. And the reason that I just got out when it was working, I mean, this trade was working. It was, look at this, it respected the EMA perfectly all the way up. Um, Even after my intraday break, I did have, a pullback to this 4 level, 405 level, but I mean, buyers took control of this thing and drove it up. Or you can also call this a short squeeze. Either way, I think what really happened is this move was a short squeeze. This initial move here was probably a short squeeze, and then buyers came in and said, "Whoa, this thing's really breaking out," and then probably a combination of both. So um, it drove it up pretty high, but I ended up getting out because I was feeling a lot of stress in this trade. I was feeling the sweaty palms, the heart rate, going a million miles an hour. I was worried. I was unsure. I was not confident anymore. Even though looking back in hindsight, the price action was very clear. One thing I didn't really think about was the range and the volatility that this stock has. I mean, this one entry, this bar that I entered on, it went from 421, where, I'm sorry, 426, down to 401 in the same 2 minutes. So me looking at my matrix, I was in this thing while it was doing this, and my profit and loss was just bouncing around. It was up a lot and then down a lot and then break even. It was just in the matter of seconds. It was a little wild for me, because normally I'm trading stuff that's very um, it's not so volatile. It's more easy to trade, trader friendly, so to speak. But this, I wasn't seeing straight at this point. I wasn't seeing that it was respecting my areas. I wasn't seeing that buyers were taking control, or the short squeeze was kicking in, and I wasn't seeing those things. All I could see was, oh my God, how much money am I going to lose on this thing? And oh my God, how much risk do I have dollar amount wise? And those are not the things that you should be focusing on when you're in a trade. You should let the trade speak to you, and let the price action speak to you. And in this case, the price action was saying, hey, stay in this trade, because um, even at my exit, I was above my entry point, and we had this nice bar that pulled back uh, to retest this breakout point, and then boom, there it went from there. So the lesson really is make sure you're predetermining your risk dollar amount or whatever it is that scares you, if it's a percentage or, they go hand in hand. But, I usually, I'm thinking of it in a dollar amount perspective. But um, you always want to look at that and know that before you go into a trade. Know how much you're risking, and if you don't accept the risk, then you should not be getting into the trade. And in this case, I just threw an order in and didn't even. I don't believe I even calculated my dollar risk, to be honest with you. I just didn't want to miss the play. And lately I've been working on just getting in and not missing plays that are great plays. But there's got to be a balance. You've got to be able to not miss plays, but you can't just throw orders in. You got to also predetermine your risk and know exactly what you're doing before you do it. So you know how to handle situations like this bar here where I entered and it slams down. If I would have already accepted my risk and I was watching the price action and thinking clearly, I would have been like, well, you know what? It tested that EMA. And look, it bounced right off of it. It tested it one more time and then there it went. So that's a good lesson to always know your risk before you enter a trade so you don't get in and you're surprised and nervous and emotional about it. And my emotions cost me this trade.